A very good evening to everybody sitting over here. We are going to start our next session. And yes, this is going to be insightful for all of you. A very warm welcome to all the delegates, all the seniors over here and my fellow professionals. I am Sonali Jain and really it's an honor to be your Master of Ceremony for this significant session. I request all the members who are standing close to the door to please grab your seats as soon as possible. First of all, मैं चाहूंगी अपनी ऑडियंस के लिए अपनी तरफ से एक बार जोरदार तालियां और आप सभी भी अपनी तरफ से अपने आप के लिए एक बार जोरदार तालियां. मैं चाहूंगी कि इस सेशन को एक यादगार सेशन बनाया जाए एंड जहां आज हम बात करने वाले हैं ना, जिस टॉपिक के बारे में आज हम बात करने वाले हैं ना, दिस इज रियली अ टॉपिक जिसके बारे में बात करके आपको लगेगा ओ माय गॉड, व्हाट अ काइंड ऑफ कंटेंट टुडे वी हैव लर्नड हियर. Now, they say trust is not built by chance, but it is built by the responsibility, transparency and accountability. And this, in the world of governance and auditing, trust stands firmly on these three powerful pillars. And what are they? Written just here. And these three powerful pillars are management, TCWG and our auditors. Today's session, the trust triangle is between three of them. Basically, we'll be talking about the management, TCWG, auditors and their alignment. What are their responsibilities, etc. कभी-कभी कुछ लोगों को तो शायद standards on auditing शायद 260 या 265 की याद भी आ गई होगी. Indeed. Now, in today's session, we'll be bringing all these three topics, all these three content together. Also, we are privileged to have a stellar panel of leaders who are really experienced and they carry a lot of professional expertise. I promise you, this session will not just keep you awake, but definitely keep you thinking long even after it concludes. At least you will be remembering each and every content which is being delivered over here. And कहते हैं ना कि जब आप किसी को पैसे देते हो ना, पैसे देना आसान है, but knowledge किसी को देना आसान नहीं होता. तो आज जो भी पैनलिस्ट हमारे साथ में है, जो भी स्पीकर्स हमारे साथ में है, जो भी वो नॉलेज दे रहे हैं ना, I believe that we all are so lucky कि हमारे को वो सब कुछ सीखने को मिलेगा. Indeed, अगर आप भी इस बात से सहमत हैं तो एक बार जोरदार तालियां बजा दीजिए. यस. सो क्या कोई मुझे बता सकता है कि टॉपिक का नाम क्या है? जस्ट वेरी सिंपल क्वेश्चन. टॉपिक का नाम क्या है? विदाउट सीइंग ऑन द बोर्ड हियर, एवरीवन, कोई है जो बता सके? रेज अ हैंड. टॉपिक का नाम. ओके, तीन लोग जिनके बारे में टॉपिक में बात की गई है. पहला मैनेजमेंट, दूसरा TCWG एंड तीसरा ऑडिटर्स. ओके, दोस्त चार्ज विद गवर्नेंस है तो बेसिकली मैनेजमेंट के पार्ट ही, बट ताऊ जी की तरह पापा से बड़े रहते हैं. राइट? चलिए. सो नाउ आई विल रिक्वेस्ट आवर एमिनेंट डिग्नेटरीज to please come on dais as I introduce them. So firstly, I'll request CA Ravi Patwa sir, Vice Chairman, Auditing and Assurance Board of ICAI, our moderator for this session. Applaud for him, yes. Now I'll request the speakers, the panelists to be on stage. Firstly, I'm going to invite Mr. Hussain Niyazy sir, Auditor General of Maldives, whose global perspective on the public accountability enriches this forum. So please, yes, everyone, a round of applause for him. तालियों की आवाज रुकनी नहीं चाहिए. Everybody, yes. With this, our next person to be here on the stage is Naveen Singhvi sir, Principal Director, Commercial, CAG of India. Everybody. And now I am inviting on stage CA Chitale sir, who is the past president of ICAI. Together with that, I request CA Manoj Fendis sir, past president ICAI, to join us on the dais. Everybody, please give them a round of applause. So please have your seats. Really, we are honored to have such distinguished panelists today for the session. Now, I'll be inviting on stage CA Ravi Patwa sir for his speech.
Very good evening, friends. Let me at the outset tell you that this is not a speech. I'm only going to give an opening remark of 3-4 minutes just to set the ball rolling for the eminent panelists to enlighten us, enlighten this whole gathering. I'm extremely delighted to have people like Mr. Niyazy, Mr. Singhvi, Chitle sir and Fadnis sir on stage as the eminent panelists. Friends, the trust triangle. Management, those charged with governance, and auditors. And aligning auditors' responsibility with, rather auditors' accountability with TCWG responsibility. The first thing which we must understand is this, that the relationship between these three pillars should be very clear, very focused, and forward-looking. When we talk about clear-cut distinction of relationships, we are not talking about different sets of responsibilities. Although the responsibilities are different, they are interlocked to each other. Say, for example, the management has the role to ensure that the internal control system is very, very good, to ensure that proper financial statements and disclosures are made available. The TCWG has foresight responsibility to assess the strategy and risk, to ensure that the controls are effective, and to even ask management questions when it is required. Whereas auditor's responsibility is as an assurance provider from outside, and hence they have to be very, very objective and ensure that whatever the management is presenting and TCWG is approving, that is a proper display of the financial statements and disclosures required. These are three different roles of the three triangles of trust. We must also understand, friends, that trust is not static. Trust keeps on changing with the regulatory requirements at times, governance requirements, government requirements other. Most importantly, the societal changes. What trust used to mean 20 years back from the financial statement presentation point of view may not be displaying proper level of trust as of today. So they are dynamic in nature. So these are my initial thoughts. I will request one by one each of the panelists to give 1 or 2 minutes of initial remarks, after which we will start the panel discussion where I will be asking them questions for them to answer. And then, time permitting, we may take a couple of questions from the audience also. Thank you very much, friends. Enjoy the session.
Everybody.
So, may I request Mr. Niyazy to kindly give your opening remarks, please?
Yes. So, with you permission of yours, I would like audience to know about our eminent panelist for the today's session, as well as Ravi Patwa sir. Already he has spoken a lot, but yes, I would like कि मैं चाहूँगी audience to know about him. Yes. So first of all, CA Ravi Patwa sir. CA Ravi Patwa sir is a Central Council member of ICAI, and currently he is serving as a Vice Chairman of the Auditing and Assurance Board of ICAI. And he is also the Vice Chairman of Internal Audit Standards Board, highlighting his focus on the governance, risk management and internal control. With 2 decades of rich audit experience, he has handled start as well as internal audit across banks, insurance companies, central and state PSUs, large corporates, autonomous institutions and various government departments, including the World Bank and the ADB audit projects. His exposure spans public sector accountability as well as complex corporate environments. Now I would like to introduce you with the very first speaker, the very first panelist of today's session, Hussain Niyazy sir. Auditor General Mr. Hussain Niyazy is a public audit professional with extensive experience in the field of finance, accounting and audit. He is a chartered management accountant as well as chartered global management accountant who counts over 20 years of service experience at the Auditor General Office. I really welcome you, sir. Yes, everybody. I would like to introduce with you our next panelist, Naveen Singhvi, sir. Shri Naveen Singhvi is an Indian Audit and Account Service Officer of 2008 batch. He is a commerce graduate and a qualified chartered accountant as well as company secretary. At present, he is holding the charge of Principal Director in the Office of C&AG of India and looking after the energy sector, oil, coal, mines, steel sectors, ministries and CPSEs along with the coordination with the ICAI. I welcome you, Naveen sir. Yes, now I'm going to introduce the most energetic Mr. Mukund M. Chitale sir. Everybody. Yes, he is highly respected chartered accountant with more than 5 decades of distinguished professional experience in the field of auditing, taxation, corporate governance, banking, financial regulation. Oh my God. We are so lucky to have him here on the dais, everybody. Yes. He has played significant role in shaping India's financial and regulatory framework through his association with the various government and regulatory bodies. He has served as chairman of National Advisory Committee on Accounting Standards appointed by the Ministry of Corporate Affairs and has been the member of several high-level committees by the RBI, SEBI, RDAI and Central Vigilance Commission. Everybody put your hands for Mr. Mukund M. Chitale sir. And yes, now we have CA Manoj Pandit sir, who was also the president of ICAI in the year 2015. Everybody put your hands for Manoj Pandit sir. He was the president of Confederation of Asian Pacific Accountants, CAPA, a regional international organization of 32 professional institutes from 23 countries from Asia and Pacific region. In Feb 2025, he was nominated by the Honorable Supreme Court of India on the ad hoc committee to manage the affairs of an educational institution nearly having 2,000 students. Oh my God, he has also served as a national treasurer of the Lokmata Ahilya Devi Trishatabdi Samaro Samiti, which was especially constituted to celebrate the 30th birth anniversary of Srimati Ahilya Devi. Oh my God. Sir, we are very happy to have you here. Everybody, put your hands for CA Manoj, sir. Thank you so much. Over to you, sir.
Niyazy, sir, please.
Good evening, ladies and gentlemen. It's a privilege for me to represent the Auditor General's Office as well as the Chartered Accounting Institute in this eminent panel discussion. First of and foremost, we have a very close working relationship with the CAG's office as well as the Chartered Accountants of India. We are also glad that the Chartered Accountants ICAI was the sponsor for the CA Maldives when we applied for the IFAC membership. So on behalf of our President, Mr. Muhammad Halim, and all the council members, we really thank the ICAI for the ongoing support that we always receive to the Maldives. Now, on the subject of today, we are talking about the three players. So, first and foremost, we believe, and I believe that for the trust triangle, as we refer to work, it needs to be stable on when all the three players, the management, those charged with governance, and the auditors, accept the discomfort. And when I mean the discomfort, I refer to the real hard questions and the real challenges that we need to face. Of course, that means like the management needs to accept scrutiny, and those charged with governance, they need to challenge the status quo, and of course the auditors needs to accept, or rather have the professional courage to ask and to act independently. So those are my opening remarks. Thank you.
Thank you, sir. Chitla, sir, if we can have your opening remarks and then.
Good evening. Nice to be speaking on a platform which is organized by the institute. But before I go to the subject, I remember my old days in the college as a lecturer, where on a gathering day, if you have to speak in a classroom, what kind of feeling you get? You are talking before a group of 100 people, whereas others are enjoying outside. I think today, if I put it very straight practically, we have come to this stage where in a subject of auditing, there are about 85 people present here. I counted the number, whereas the registration could be in thousands. Now, as a profession, I think this is the first signal that we get, and all of us in different countries must start worrying about that signal first. We talk of very high-sounding principles about management, governance, auditors. I'll come to that subject. But I think since this is a conference of chartered accountants across the world, the Institute of Chartered Accountants of India and all over the institutes must take this as the first danger signal, because by the Darwin's theory, that part of the body which we don't use slowly evaporates. I think it will be difficult for me to speak beyond that. Let me go on to the subject straight away. Management is expected to perform and give the results. Those in charge of governance are expected to have control, supervision and direction. All of them produce financial statements which are to be audited by the auditors. And therefore the triangle that we call about is the trust triangle. A trust can start only when the transparency is there, and having been done as an audit and also as a director of various companies, if all of us believe that this trust is 100% existing, there would be no frauds in the countries, either in India or outside India. So the reality is that the trust does get broken occasionally. The question is, where does it start and where does it end? I think that's the topic that we should try to look at. How do we look at this topic? I think the management will always go by its own objectives. Those in charge of governance will have to follow the rules of respective country, law, etc. And the auditors are expected to follow their own principles. Now when they are in conflict, ultimately, who are the people who are responsible for either doing a problem or not detecting a problem? I think that's the reality that we have come to today. When we go on to the more subjects, we'll talk about it further. Thank you.
Thank you, sir. Naveen, Singhvi.
Good evening, everyone. It's actually a privilege to be in this august company of Niyazy sir, Chitle sir and Fadnavis sir. with my, so obviously Sai Maldives, Sai India goes a long way. And I had the pleasure of hosting him. And we have an MOU with Sai Maldives to have a joint training program where the officers from Maldives train in our academy. So it has been a wonderful cross-cultural experience where we both learn from each other. So it's a privilege to be in your company, sir. And Chitale sir and Fadnis sir, when we used to be very young. So I was doing chartered accountancy in 2000, 2001 too. So those were the names when stalwarts of that time. So sharing a stage in 2025-6 as an equal here professionally, it itself is a matter of great privilege for me, and I'm thankful to ICAI to found me suitable enough to sit with them together, parallel at one stage. So thanks a lot, Patwa ji, for that. And coming to this important topic, I think one aspect to look into this issue is there are 3 participants and how they are performing their role. I have a slightly different perspective to look at this issue. I think importance given to any role also comes out of the fact that what is the importance which is there in public parlance relating to that role. And when I used to teach financial audit in our academy back in the days, around 4-5 years back, so the first question which everybody used to ask me, sir, what is audit? I say, hota kya hai? Anybody can go and check who is doing it. It's very easy to comment. What's the value of audit? And my answer to them to explain those principles was separation of ownership and management. When it started back in the years 200, 300 years back, when joint stock companies came into play. So the people who are owning that organization are not the one who is running the organization. They are funding it, but they are not running it. And it obviously started growing. Stockholders came, then financial institutions came. How do they know how their money is being used? And financial statement becomes the medium of communication of that information. You all are chartered accountants. There is no need to, preaching to the Catholics that what is the meaning of Jesus. The point is you all understand what financial statements convey. But do the community at large understand what financial statements convey? And do they place value on the important thing which is called as trust? What's the trust? Trust is the bridge of trust which is created. If I see a financial statement, there is a seal down below by a chartered accountant or a statutory auditor saying, yes, it conveys true and fair view. Do as a society we value that seal? Do we value the word written there, that true and fair view? And until and unless as a economy, as a society, we all mature enough to understand value of that seal. Till we do that, we won't value the trust which is there. And when that relevance and value come to the word trust, I think some of the issues we will discuss with Patwaji's moderation, it all, in my opinion, comes from the fact that there is no value, equivalent value to this trust which should be given from the outside. When it is given, it will become relevant. It will become more relevant, it will have more consequences. So management, TCWG auditors, all 3 participants of the triangle perhaps will become more serious. But this is just a starting talk. Perhaps we will discuss this aspect more in detail. Thanks a lot.
Very good point you have raised, sir. We'll definitely discuss it in the course of the panel discussion. Now, Fadnis, sir.
Thank you, Raviji, and my great pleasure to be part of this panel. Thanks to the Institute and the Honorable Council for this opportunity to be part of this panel discussing on this important subject of this very important triangle and the concept of the trust. I fully endorse the views as mentioned by the preceding speakers. Just to add to that, as I look at audit, audit is really a function. It is not just between the auditor and auditee, as all of us know, but the contract between the auditor and auditee is relied upon, as Mr. Singhvi just mentioned, as a result of the growth and evolution of joint stock companies, separation of ownership and management. So it is though a contract between the auditor and auditee, the ultimate product, the audit report, is relied upon by the stakeholders. And the stakeholders today, as we know, are not just limited to the shareholders, but extends across the society to the creditors, bankers, and others. Now, given the fact that the work done by the output is relied upon by the third parties who are not privy to the contract between the auditor and auditee, whatever we talk in terms of quality has to benchmark ultimately with the reliance which is being placed on that audited financial statements, which is the ultimate product of this process.
And therefore, when we say as auditors, and generally as we say that we look at the customer's delight and the client delight, I think what is important for us is to keep at the back of our mind the fact that the client is not the auditee. The auditee who pays me my remuneration is not my client. My client is those stakeholders who rely on the work done by me. And if I can benchmark the quality with respect to what my clients, the stakeholders have expectations on me, and that actually includes the entire three bodies which has been very appropriately brought out in this subject matter of discussion, the management, those charged with governance, and the auditor. So it has to be a collective responsibility of all the three, and therefore there must be trust and confidence in each other that we benchmark our work with respect to what is expected. I think I'll take a pause here and we'll discuss as we go forward.
Thank you, sir. So as we start the panel discussion, I will request all the panelists to restrict the answers to 2 minutes approximately, if possible, as far as possible, so that we can cover more and more questions, and maybe we can take up a few from the audience as well. So Mr. Niyazy, you are the Auditor General of Maldives, and obviously this gathering of auditors from India also would like to know about what is happening in Maldives. So just your initial thoughts on trust triangle as it is prevalent in Maldives, both in the public sector and the private sector.
Yes. When I get called upon to the Parliament by the Public Accounts Committee, there's a question that they often ask. Why the repeated qualifications? Why the repeated audit issues? And they would ask me, is it because of lack of laws, or is it because of lack of regulations or internal controls, or what seems to be the issue? And they would ask me, why do you keep on writing the same issues over and over again? And I think this is an issue that we auditors often get asked even by the boards. So for one thing, I would really encourage everyone to actually still issue repeated qualifications if the management or the accountants do not follow the regulations, or if they do not follow the appropriate standards. Because we need to take up these issues until the action is taken. And often it's a mix of things that actually recurs. It's not only the lack of controls or the laws or anything. Sometimes the culture of the organization is more important. They say like the culture of the organization eats the strategy or the controls for the breakfast. So even if you have on the manuals and proper controls as such, if there isn't a proper culture to respect the professionalism and the integrity and things, then you would see that there are lapses in the controls in the actual practice. So it's a mix of things, and in any case, the auditors need to work together with the boards and with the management to ensure that the correct balance exists, because we need to have an ongoing business case as well, because you cannot have too much controls that would impede the business processes as well. Thanks.
Thank you, sir. Chitale, sir. Sir, many a times we find in the practical field that there are, differences between the management TCWG and the auditors so far as the accounting estimates and judgments are concerned. So how should they communicate with each other from both angles? Since you have been, you have served your role both from this side of the table and from the other side of the table.
Yeah, I think there are three parties to the game: management, those charged with governance, let me call them straight away as a board, and the auditors. Without disrespect to the whole board system in the country, I don't know how many board members really read through the entire accounting policies and notes on accounts. Assuming that they read it, how many will really apply their mind? So the principles really start from the management. They know the principles which are followed. They know the practices which are done. To the extent they are able to communicate to the board and the board takes it on record, I think that's their total understanding. Now let's assume that this total understanding as compared to the auditor's understanding is different. How do they communicate to each other? I think that's the question. When there's a basic difference between the two, the management plus the board will have to communicate as to why a particular estimate is followed, what's the logic and what's the reason for that. A mere statement that this is our opinion carries no value anywhere. That value has to be based on either the law, regulations or an accounting standard. Now if it is not based on that, the auditor should not accept merely an opinion. Secondly, there are practices which are developing in the country where even on accounting issue, people take a legal opinion and accept it. Now somehow I have a completely different view on the matter. If it is an accounting matter, the management and the board must take their own view. They might take a legal opinion in support of whatever they wish to do, but the auditor must take his own views and decide would he agree with it or would he not agree with it. Auditors cannot be saying that based on the legal opinion we have done something like this or we agree with it. I think that's the reality in which all of us are living. Now, how do they communicate to each other? As long as both agree to adjust their views to the common point of view, I think there is no problem. But if the management and the board are not able to agree what is the reality, then the auditors have no choice but to either say that it will be an emphasis of matter or it will be a qualification. Sometimes the auditors try and choose a key audit matter to be a story in between. I think that's an incorrect way of handling the matter. Key audit matter cannot take the place where there is a fundamental difference of view between the two. I think that in short, in 2 minutes is my point of view.
Thank you, sir. Singhvi, sir. TCWG is the center of the trust triangle. So beyond approvals and reviews, what should TCWG, how should TCWG actually ensure that the governance mechanism is real and strong? Foresight mechanism.
If we go back to the design, how do we define TCWG? That comes as the first important issue. So no.
That I will say board and audit committee to do that, yeah.
So I think the issue starts with the fact that when we say center of the trust triangle, so what is center? The center, in my opinion, TCWG has to play a balancing role between two responsibilities. First, responsibility of auditor, where he is supposed to give an assurance on the financial statement. And obviously the primary responsibility is of the management who is supposed to prepare the financial statement. So balancing this means how do you balance this? Obviously one aspect is when they have their annual meetings, they will see the financial statement, give their approval. But should they limit their role to that? Or should they play a more proactive role? So practically, how can they play a more proactive role? So I can give you an example. When we go to multilateral bodies like United Nations and all, so there the audit committee, which is the primary player of TCWG. So they have an IOAC mechanism, which is called as Independent Oversight Advisory Committee. All the members of that audit committee there are actually from outside the organization, with the secretariat role played by organization, which coordinates. So what do they do? And can we adopt some of those practices in our ecosystem? So the involvement of the auditor with those bodies is not limited to in the end when the financial statement are prepared and auditor give the opinion, they discuss both. The involvement at least happen thrice a year. It starts at the audit planning stage, where there is an active involvement of TCWG, where they understand what is the risk assessment carried out by the auditor. How do they perceive control risk? How do they perceive mitigation measures, and how are they making their audit plan to mitigate these risks and check those assertions? Then they have and they also give their input. Secondly, they meet in between, before the financial statement are finalized, to check stock of what are the significant issues which have been noticed by the auditor till date. And are there certain proactive measures they can take before the financial statements are prepared, or certain fraud indicators which are there where can they take preventive mitigation measures before it happens. Then they meet in the end when the financial statements are prepared and they take stock of the auditor's opinion. And at all three stages, it's an open dialogue, constructive dialogue. It's not limited to a compliance check to be done in a box. And one more thing which happens there is, all the meetings are actually suffixed by a 30 minutes or an hour's closed door session as they call, which is not recorded. It's an informal session where the concerns which perhaps cannot be shared formally are shared absolutely in an open way. So something can be brought on paper, something which are conjuncture, you still haven't got a clarity on that, you can discuss frankly. So perhaps a bit more proactive, open communication channel between the auditor and TCWG, and similarly between TCWG and management, can make this role more pragmatic and more outcome oriented rather than just a compliance check which we have to do because it is a statutory requirement.
Thank you, sir. That would again provoke some thoughts for sure. Padnis, sir, how can the auditors ensure that the risk assessment is robust and entity specific, especially in the case of fraud risk assessment and significant judgment areas?
So that's a very relevant practical question. You are questioning the risk assessment in a area which is subject to frauds, high fraud risks, or it is a high judgment involved. So practically I would say is first say your prayers, hope that everything goes well, and then dive deep into the subject. And when you dive in the subject, I think one needs to be guided by the relevant standards which are there and which come out sufficiently, which bring out sufficient clarity as what is required to be done. So if I say look at the risk assessment in terms of what is the business model which the company has, what are the regulatory aspects which are involved, and what is the financial structures. So financing is by way of debts, and if it is a high leveraged entity, the consequences, risks of management overrides is something which one would really like to look into in a more pragmatic and in a more detailed manner, because that is where the risk of overstating the revenue or underplaying the expenses would always be there. Then you move on to, we have a standard and we say that fraud is not the objective, fraud detection is not the objective of an audit, and rightly so. But at the same time, what is important to be borne in mind is that the probability of a fraud taking place is always has to be imbibed by the auditor in his audit plans. And therefore sufficient measures need to be taken to see and so to say smell if the fraud is there. So one has to be, when we say be a professionally skeptical about an audit, it really means one has to be really alert and keep your eyes and ears open so far as that is concerned. And when you have issues which require high judgment and which is so prominent in context of the Indian accounting standards, which are benchmarked with the IFRSs, so where you have more of a fair value coming into the financial statements, and the judgment of one person could differ from the judgment of the other. So there it is important that you follow the standard on fair value estimates, auditing the fair value estimates, SA 540, in letter and spirit, and see that you bring out a range of probabilities and challenge the decision of the management before you accept it. So these are all basic principles which are there in the standard and which need to be implemented properly. And if done so, I'm sure one can really have a robust mechanism to ensure that you have done your risk assessments properly, and basis the risk assessment, then you plan the audit procedures.
Thank you, sir. Mr. Niyazy, when an auditor informs about some control deficiencies to the TCWG, how should the TCWG react to ensure that the remedial measures are fast, are effective, and are not encompassing the other areas of the business?
There's a professional joke. It happens like when the auditors raise a certain issue, how do you actually get away with the audit qualifications? And perhaps the easiest way is to actually rotate the auditor. But this is something that could happen, and that's why the independence of the auditor needs to be respected. And especially for the listed companies and for the public sector, this is a very crucial issue that needs to be addressed. The tenure of the Auditor General as well as the tenure of the appointed auditors needs to be for the long term, at least 3 to 5 years. Because if the tenure is just for 1 year, there's the risk that if the management or if those charged with governance is not happy with the audit issues, they might rotate the auditor just to get away with the qualifications. So for one thing, I think since there are issues, whenever there are audit issues, I think the boards needs to have a timeline to ensure that the management takes action on those qualifications. It needs to be time bound. And the second thing is, I think there should be a follow-up mechanism to ensure that the recommendations or whatever the timelines that the management gives to rectify the issues, it's taken care of. Because if not, these repeated timelines and revisions, they may not get acted upon. So for two things I think is important. One thing is it should be time bound and there should be follow-up to ensure that the recommendations are taken care of. Thank you.
Thank you, sir. Chitale, sir. Sir, the role of the three pillars is interconnected, but they should not overlap. But in the practical field, except for the extremely professionally handled businesses, we find that the roles are many a times overlapping. So what are the main drivers for the lack of role clarity and how to tackle it?
Yeah, I think if I look at the audience, the people are from India and from Maldives. Now, I don't know the law in the Maldives, therefore kindly take my answer as based on law in India. As far as India is concerned, earlier the law used to say that the management is responsible for preparation of financial statements. After 2014, the law very clearly says the board is responsible for preparation of financial statements. And therefore, fundamentally it is very clear that those charged with governance supported by the management are responsible for preparation and the auditors are responsible for reporting on those matters. But if you talk to any senior expert director, his views are, we have appointed auditors to tell us what is problem in our organization. That's the straight answer which comes from the board. Now, if audit is a profession and it's rendering service to the society at large, my first thought is, as a profession, we'll have to start educating even after 70 years as to what is our role and where do we stop and where do we begin. I think if you do not do that, this kind of overlap, which is a perceptual creation, will always continue. First point. Second point, even in our auditing standard, still there exists a standard called management representation. Now actually that should be a board representation. If the law requires that the board should prepare financial statements, the management cannot be making a representation. Now this is a fundamental view which as audit profession we'll have to start dealing with, and the earlier we deal with, it is better. And lastly, sometimes this kind of overlaps are purposely created, sorry for saying that very openly, but that ensure that ultimately when there's a problem, one does not know who is responsible. And I think that is where the entire profession, not only in this country but across the globe, has to move out and very clearly put out that it is the management and those charged with governance are responsible for this stage, and the responsibility stops there. Auditors have only responsibility to report. Now if they don't report properly, they should be held responsible. Now if the audit profession does not come out and say this very openly, we'll continue to get the beating that we are getting either in this country or outside the country. Thank you.
Thank you, sir. Another thought which is provoked. Let me tell these, eminent panelists and the crowd here that we are recording it, and there are many good things which are coming up. From WSB, we will try and, prepare a gist of the very important issues which are discussed so that we can look into it in future. Singhvi ji. Sir, in cross-border complex group structures, especially in large PSUs, at times even for geopolitical reasons and all, oversight by TCWG and accountability by auditors both become really difficult to actually carry out. How to handle this situation? As an auditor, even I would like to know about it from you. What is your point of view on that?
So, interestingly, Patwa ji, after 39 minutes, you told us that it is being recorded. No. It was on a lighter note. So, the complex group structure, it's actually, I'm pretty sure it's not just limited to PSUs. It's much more prevalent in private sector. When you have all the yeah, because PSUs, it's limited number of PSUs right now are in that domain. But I think the question is equally valid for both, PSU and private sector both. And PSUs become a bit more complicated because, you know, CAG of India has the responsibility of appointing statutory auditors. So when we appoint statutory auditors in India, we have a robust mechanism of appointing those auditors. But it becomes challenging when you appoint auditor for an entity which is operating outside Indian jurisdiction. So there is an internal mechanism which we follow, so, but it creates a challenge. Now, for me, what is more important when there are group structures is, does the participants of the trust triangle, do they take group as a whole approach, organization as a whole approach, or do they continue to love working in their silos and see, I am auditing only this and I will only take care of that. And I think the proper solution lies in when, at least at the group TCWG level and at the group auditor level, the approach is taken for group as a whole. And how does it help? When TCWG define what are the controls parameters, what are the control culture expectation, which they expect, what are the minimum Lakshman Rekhas which should not be crossed by any group entity, whether they are working in any jurisdiction. Are those charged with governance able to understand that there are different kind of local risk? An entity, group audit entity working in a jurisdiction in a continent which has more violent and law and order issues, and the one which is working in a more developed environment will have a different kind of control risk. Are the those charged with governance structures able to assimilate different kind of risk which exist? And are we able to draw a minimum Lakshman Rekha which can be applied everywhere? Are the people who are part of those charged with governance constantly and proactively interacting with not only with the group auditor in that particular jurisdiction, but with all the component auditors which are operating and taking their work into consideration? These 3-4 aspects become very important to make the work of the TCWG in a group structure very important. And second part is, what is the role of group auditor? Now there are detailed essays and ISAs to work as a group auditor, but are they followed? As somebody said before me, they are followed in letter and spirit. So are you limited to ensuring that mera responsibility limited, right? Let's ensure that. Or the group auditor take an ownership, take a responsibility of driving all the component auditors along with it. Is the group auditor actively seeking what are the local risks which exist at the local component level and assimilating that to see statements at the group auditor level? So perhaps in the summary, when we all take group as a whole and take ownership internally in the trust triangle, then it is easy, and if it is not, then it results into fragmented responsibility. So the risk is everybody's baby is nobody's baby. So I think that's the risk which we should try to avoid in this complex group structures.
Thank you, sir. I would just like to say, sir, that so far as the group auditors are concerned, I believe every auditor writes to the component auditors, tries to get information. But when it comes to outside India, enforcing them becomes a responsibility.
That's where the role of TCWG comes into play. Are they able to force their local jurisdiction to respond properly to the group audit? So that's why their role is very important to see organization.
And Chitale sir said, and all of us know, that somehow the young professionals are, except a select few, not very interested in entering into audit profession. And I believe for that the major reason is risk-reward ratio. So my question is to Fadnis sir. Sir, how should the remuneration for all, the management, the board, that is TCWG overall, and the auditors be structured? Because it is not about the auditors only now, even the independent directors are thinking 10 times before accepting an appointment. So how should the remuneration be structured so that the risks are covered properly and so that it is actually, if the integrity of accountability is effective?
So this is one issue which is always puzzling the boards and the auditors simultaneously, given the fact that the auditor's remuneration, as traditionally said, is to be decided by the shareholders, but typically the shareholders in their resolution delegate that authority to the board to decide. And today, particularly in India, as the auditors are appointed for a period of 5 years, it's not possible to lay down at the time of their appointment what would be the fees to be charged for the 5 years. And therefore, to that extent, it is right that the responsibility is given to the board. But at the board level, to start with the remuneration which should be payable to the board, of course, so far as the Companies Act is concerned, it is quite regulated remuneration which is payable to the directors, so much as not exceeding this amount as the sitting fees payable to the board to the independent directors attending the board meetings and the committee meetings. And there is a good mechanism of disclosures in the annual reports as to how much has been paid to which director as sitting fees and also as commission, as section 197 permits through schedule 5 of the Companies Act, payment of remuneration and commission to the extent of 1% of the net profits or as may be decided by the shareholders, which I think is a good mechanism. But to add upon to that is what the Reserve Bank of India has done for the banks and the other banking sector companies, is where there is an additional remuneration which is in lieu of commission, which is fixed by the boards and which to the ceilings as prescribed by the Reserve Bank for the banks and the NBFCs is prescribed. So when you join a board of a bank, you know that this is the maximum remuneration one could get and what are the responsibilities attached to that. And today it is typically quite common in the banking sector, and maybe some examples I'm giving because of my association as a director on the board of a bank, private sector bank, where the Reserve Bank has now mandated the remuneration payable to the management to be structured between fixed and variable. And a certain amount of remuneration is to be paid over a period of 3 to 4 years with a clawback in case of a material misstatement in the financial statements. So I think that is a very good check and balance on the management and the boards, and which should be considered even in the non-banking sector as we move forward. The current restriction on the in the law that no ESOPs can be granted to the independent directors is something which needs to be thought through, because when it can be granted to those who are executives and are being given the remuneration in the form of ESOPs, principally what is so wrong about being, if it is given also to the independent directors, is one issue which one could always debate and deliberate so as to take the current procedures to the next level. Of course, so far as the auditors is concerned, the remuneration has to be reasonable and just. It should not be less. And of course, in case of selection of auditors, now what are the best practices which are being followed globally and which could be thought through in India is including disclosures by way of auditors' reports. So I've seen certain companies listed on London Stock Exchange giving details about how the audit committees have functioned, how many meetings have been there, how many continuing professional education programs have been attended by individual directors. So these are best practices which should be considered even in the Indian context. Also, what could be considered is the audit committee giving a justification of what is the remuneration, how it has decided that remuneration, and how many man hours are they expecting from the auditors to be working on the audit. And that justification, once it becomes public, could be a safeguard to see that the audit fees is neither too less and not too exorbitant. So there has to be a balance struck between the two. And I believe the greater the transparency in these areas, the better it would be. It would act as a safeguard both for the auditor and the auditee. So that's how I think should be considered.
Thank you very much for your thoughts, sir. Mr. Niyazy. We know that the final responsibility of presenting the financial statements lies with the TCWG, and they are also the center of the trust triangle. Now, do you have any thought on any specific additional disclosures which can increase the stakeholders' trust?
Yes, as you rightly said, it's a fiduciary responsibility of the board to ensure that the financial statements represent the true working status of the company. One thing I think as a Chartered Accounting Institute, I think we have to support the cause for at least, I suppose, the audit committee to be chaired by a chartered accountant. I truly believe so. Because if you really want to scrutinize the audit reports, I believe the board, the chair of this, the audit committee has to be a chartered accountant. And in some jurisdictions, it is not a necessary regulation, so it's not a necessary provision. But as a profession, I believe we have to support for this cause. And your question of what should be yes. I think definitely yes. And one thing is, I think we have to get the fundamentals right. First and foremost, those charged with governance, especially the audit committee, needs to ensure that there are proper accounts done, monthly accounts, quarterly accounts done, no compromises. And that has to be the accountants or the finance director has to comply with these things. And the fundamentals, if it's broken, then it becomes an year-end compliance provision. So you don't actually use the accounts to run the business, but rather just as a provision. It's because it's necessitated by the stock exchange, or if it's necessitated by the law, as an year-end exercise you do it. But I think throughout the deliberations of the audit committee, they have to ensure that the fundamental accounts are done and the reconciliations are done properly, and there has to be the time-bound reporting to ensure that proper action actually is taken. So without those things, without those fundamentals, I don't think the board should go for the other things. Of course, there are the other issues like risks as well as and the strategy as well. So the risk and the strategy, how well it's managed, I think these are the fundamental questions that the audit committee should be asking the management about. Yeah.
Thank you, sir. Chitale, sir. Sir, trust of the stakeholders is of paramount importance. But the biggest deterrent in trust is perhaps the frauds which happen. Now, the primary responsibility of ensuring prevention and detection of fraud is with management. And the oversight role for that is with the TCWG. But whenever a fraud happens, it is always the auditor who is the first target and never the management or the TCWG. So what is the end of it?
I would not take fraud as a point of discussion, but I'll take this question in a generic sense. See, there are two types of people. Those who mind do not matter, and those who matter do not mind. When you go back, you can think of this sentence. There are many people like us who keep on talking. I think we mind, but frankly, we do not matter where the law is made. And where the law is made, those who matter possibly have no time to think over many things which are pinching the society at large. I think that's the first point. Coming to the specific issues about the topic that we have, trust between the management, the governance and the auditors. If that governance and the management and the auditors had full trust, I don't think fraud would have ever happened. The fact that the frauds can take place, that means somewhere between the three there is a gap, and the absence of trust ensures that the communication is not complete. Communication is not transparent, and consequently the reporting on those matters from the auditors do suffer. Now, how do we deal with it? I think that's the next important point. As an audit profession, this is something which across the globe has been happening, but I don't see any research paper by any institute where it says that tomorrow if the auditors are required to do fraud detection, how much time and how much cost will it mean as far as the audit is concerned? Now, if we do not come out with something like this, I think the stories will keep on telling that this should be done, but this will not happen. Now, that's the first problem. Now, I think it is the job of all of us to see that if the society expects us to do something, either we have to respond saying that we will be able to do it. Technically, we have the capabilities of doing it, but the time within which audit has to be completed, and the just now concluded topic about the remuneration which is offered, possibly may not give us enough legroom to ensure that the reporting of fraud and the unearthing of fraud takes place regularly. The second point that one has to remember is, and this is more of a generic nature, that the extent to which we keep on modifying accounting standards every year, I think is also a basic problem. Today's accounting standards are not so simple that everybody can understand it that easily. And even with those standards, when we keep on changing them every 1 year, I think by the time they are understood and communicated, there is a new set of standards which come in. So possibly the accounting profession world over has to think over, can you give a total gap of changes for next 2 years? Whatever changes are made, they can be made effective, let's say, after a gap of time. Because if that is not changed, sometimes it appears like the goalpost itself is changing. And therefore, when we keep on ensuring that the environment in which we operate does not give full freedom to the auditors to report on those matters, or does not give them the right and the time to report on those matters, I think we have what we have. And lastly, whenever there are commercial failures in whichever country, unfortunately we have been not able to deal with them properly. The moment there is a failure, it is taken as a failure of the audit profession per se. But what is required is, was it non-compliance with standard by A or B or C, or was it failure of the standard which resulted into a fraud? Now, if we do not come out very openly as to whether it was a failure of A, B or C, or was it failure of the standard, what we get is every time we get Sarbanes-Oxley, we get new Companies Act, we get new modifications and so on and so forth. So I think this is where as a profession we'll have to react very clearly about what is it that is required to be done. Only that can help the society at large, because finally the society does need the auditors. It is not as if auditors are not required. But we have to ensure that we communicate our role properly and we create an environment in which we get proper support from the society to do that job properly.
Thank you, sir. Singhvi, sir. Sir, the current audit reports, inclusive of qualifications, EOMs and CAMs, are they delivering proper insights to the stakeholders? And if not, do you suggest any changes?
It's a very interesting question, but it brings back to my opening remark which I gave, that how much value does the trust bridge have in common parlance, by a common stakeholder. So this would be an individual comment, not an organizational representation. But I think the size of annual reports along with the auditor's report is increasing by leaps and bounds. I think we are talking about softwares where we put those 300 pages to give it a summary. So I think the entire profession need to, and the regulatory body need to have a relook. Can we simplify the information which we are communicating to a common user? I think right now the way our annual reports are, it believes everybody is an expert in finance and accounts. As Niyazy sir was telling, that audit committee at least should have a chartered accountant as a chair. But what about the people who are reading the annual reports? I tell you, it's not easy. If I took a sabbatical, I was auditing something which was non-commercial for 5 years. And I opened an annual report, it took me 2-3 evenings. Okay, stop. So now we are increasing the disclosures. As Chitali Sahab say, accounting standards are getting more and more complex, and then we are adding layers of information. Can we have some way in which there is a simplified information is available to everyone? So that is one aspect. And second aspect, I think qualifications are fairly clear, emphasis of matter is fairly clear. But I hope people at large understand what is emphasis of matter, because it is something in between. Means you are saying something and you are not saying something. So when I have to tell someone what is emphasis of matter, no, we want to emphasize, but we are fine with it. So what do you mean by emphasis? So I hope as a profession we are very clear what do we want to communicate by emphasis of matter. And third is key audit matters. Now I keep looking at key audit matters specifically in our PSU reports. So I see is more, it's coming out, generically it is coming out more as a compliance check rather than an intention to communicate. And I believe the intention behind the auditing standard on key audit matters is to communicate to those charged with governance and to the entire world clearly that those were the most important issue which in the audit I found. And those were the challenges which I faced and how I dealt with those challenges. But it is more coming in form of a standard copy-paste job where a complicated statement is written in the left and a complicated generic statement is written in the right. Do we communicate clearly that how in audit we dealt with the challenges? Can we communicate? So can we clearly communicate that after you looked into this fair valuation, what did you found? Did you think it was fine? There were 3 kind of gaps or 2 kind of gaps. Can we give an entity-specific decision-oriented output in the key audit matter rather than a structured output which we are giving? Can our key audit matters be more simplified version of communicating what auditor faces the most important challenge in audit to the stakeholders? And can we think of including an element in key audit matters where discussion with those charged with governance on the key audit matters can be summarized in some way? So I think a lot to go back on the drawing board to see the usefulness of these things increases, and the more useful everybody will find, the more value they will build in the trust bridge, and perhaps the entire profession will get more value in the market.
Fadnis sir, the last question of the panel discussion to you. Sir, 5 years hence, what single change in regulation, culture or practice can strengthen the trust triangle?
So very difficult to be look into a crystal ball and say what is going to happen 5 years from today. Like when COVID happened, we never imagined what would happen, but still the profession survived, the world survived, the society survived. I think what is important in context of next 5 years is the impact that is going to come through technology. And I'm sure all would agree that today as we look at the AI-driven models which are building up, the way the data is being analyzed, I think the responsibilities and the manner in which the work would be done will be also more driven by AI, and things in that context would change significantly than what it is today, including things like physical verification, including things like random sampling to 100% verification using technology, and including things like maybe not what is being done quarterly and annually, but which is in the form of a continuous reporting which may take place than what is at the year end. So these are some of the challenges and the opportunities that I see which would be shaping the future times to come.
Thank you, sir. See, the time's up, but since we started 10 minutes late, I have taken the permission of the organizers for additional 5 minutes so that we can take 2 or maximum 3 questions from the audience, and then we can wrap it up. If anybody wants to ask anything.
Yes. Yes.
Microphone.
Kindly pass the mic. Manoj sir has rightly said, professional skepticism, questioning mind, and here we have our questions.
Good evening. My name is Nagarajan. I am Director of Finance in a public sector undertaking. So it was very useful session, and I must thank all the panel members for their insight and for sharing their knowledge here. My specific question is about the timelines with respect to the completion of audit. What we are seeing is once the management and those who are charged with governance have submitted the accounts. Now I come from a public sector undertaking. So we have additionally a supplementary audit by C&AG. Now in the Companies Act, we do not have any clear timelines as to when the supplementary audit needs to be completed. There is no timeline as to when the accounts and is submitted to the statutory auditor when he is supposed to give his opinion on the accounts. So there has to be more transparency, and as some of the panel members have said, there has to be more details reported in our annual report with regard to the man hours spent by the auditors, spent by the C&AG, and the type of qualifications. I mean, what is the quality of those qualifications? Whether it was really important that the auditors have made certain statements which are not material when you look at the overall context of the accounts, and which has delayed the submission of financial statements. So how are these being monitored, and how are these being reported, and how are these being made transparent to all the stakeholders is my question. Thank you.
So much for the question, sir.
So either Chitle sir or Fadnis sir, if you can answer it.
Okay, I'll take with your permission, sir. But with respect to supplementary audit, I leave it to our very distinguished C&AG member. But that is where I think the role of the audit committee comes in play. And the audit committee has to balance out the requirements of the management vis-a-vis what is there for the auditors. So when you are selecting the auditors, or maybe in case of PSUs, they are being appointed by the C&AG or and not really in the hands of the companies, but nevertheless the role of the audit committee is important in that context, and the audit committee has to really ensure that the management is giving adequate time to the auditors, and the auditors are also completing the work in a reasonable period of time. So in case of listed companies, there are strict timelines in terms of 45 days from the end of the quarter or 60 days from the end of the year, and that is where the entire audit process is required to be completed. But I believe if there is a good governance mechanism there, the audit committee should be able to ensure that there is a proper balance between what the auditors are demanding and how the management is responding. If you look at the recent circular which is issued by NFRA, and I support that circular, it says that those charged with governance should have more interaction with the auditors than what is typically done in case of few of the companies, not all the companies, but some of the companies that you have a half an hour meeting with the auditors before the results are declared. And if that be so, then it is clearly an inadequate conversation which is happening between two important players in the ecosystem. So I think more the conversation takes place between the audit committees and the management and the auditors, I suppose these problems can be to a great extent sorted out.
Yeah. I would request the...
I think at the principal level, Fadnavis sir has already responded to the question, but now in context of PSU, see, in my limited understanding, Companies Act has given a clock to us. So CAG has to complete its works in 60 days after the accounts are received. So there is that much transparency in the Act, and that becomes a very interesting activity for us because all the 700 PSUs come in that single point in time. And we all rush for the 60 days clock, but we try to meet. And I think there is, in a subtle way, Companies Act already given the timeline for the main question which you asked. Because there is a timeline to hold your AGM. And there is a 21 days notice of holding an AGM. So if you break it out and work backwards, so there is an upper limit which has been decided. But whether there is a case to have further detailed timelines in the Act itself for the smaller actions, I think it's a case for larger deliberation.
Last question maybe. One more question at the most.
Yes.
Yeah, hello. Yeah.
Please
The
be...
foreigners maybe. One from Maldives.
Yeah. Sir, my question is to Chitle sir. I am Viral Shah, practicing CA from Mumbai. You made a right point on this, those charged with governance, where henceforth the management representation letter should be called as board representation letter because those will be considered as TCWG. So what's your take on forthcoming audit, where can we request to the TCWG, because we have to have those kind of a compulsory meetings with them as prescribed in the NAFRA circular. So should we be requesting them, as per your view, about instead of MRL, now BRL, and will it be signed by a particular director, which will be none other than the audit chair?
I think you have caught me on the right wordings. Thank you. I had taken the opportunity to express my view mainly to the institute. saying that kindly amend, kindly look at the standard and make it board representation rather than management representation. First point. Now coming to the practical part of it, I have seen many audit committees on the board where the audit committee even never looks at the management representation letter. So in practice, normally what I recommend to the directors who are sitting in the audit committee and especially audit committee chairman, that presently it will continue to be signed either by MD or CFO. That practice can continue. But the audit committee chairman must run through the MR letter to ensure that it communicates very clearly what is actually done. Because I have seen practically few companies where what is communicated through MR letter is marginally different than even the accounting policy stated in the notes. Now that kind of a thing is not intentionally done, but it could occasionally happen by mistake. And therefore as a moral obligation today, the audit committee must look at that MR letter which is done. But your point is absolutely right. Till the institute amends the standard, all of us, including me and my firm, will continue to call it as the MR letter and get it signed from whoever in the management signs it. Thank you.
So the last question from the gentleman from Male, please.
Good evening. Very nice discussion, in fact. Yeah. I had the privilege of working with the CIG office in 2009. I was doing basically two audits. One audit was Cotton Corporation of India. Yeah. It's a supplementary audit. And the other one is credit rating companies audit. Yeah. My question is to Sri Naveen. In fact, CIG is doing a supplementary audit. Yeah. The statutory auditor of the company appointed by the CIG does the main audit, and afterward the supplementary audit is done. In case where there are differences between the CIG audit and the main external auditors audit, basically with the qualifications, how do you go about addressing them? Because I feel that in case of differences in modification paragraphs, let's say a clean opinion was given by the main auditor of the company, and later modification or modifications were given by the CAG, how would you reconcile all these? And wouldn't it actually, undermine the quality of the audit done by one of the auditors? Yeah.
Thank you for the question. Yes.
Very interesting question, and I have my technical wing sitting here. So we have a technical wing which deals with these issues. So this is the question I already posed to my technical wing few months back. So I don't say there is no answer. See, if you look at, to understand the concept of supplementary audit, you have to see the law of the land. So when you see Companies Act which lays down the concept of supplementary audit, it lays down two clear responsibility. The responsibility to give audit opinion, a true and fair opinion or a lack of it on the financial statement, essentially and absolutely rests with the statutory auditor. The law is very clear when they say CAG of India can, it starts with the word can, comment on the financial statement or comment on the statutory auditor's report. So the work in our supplementary audit consists of two verticals. One vertical is looking into the financial statement themselves. Another vertical is to check the statutory auditor's report itself. So whenever there are cases, there are obviously cases. See, in an ideal world, if there is no difference of opinion between statutory auditor and CAG, in that ideal world, all the reports of CAG on accounts would be nil comments. But this is not the case. And more the auditing standards and accounting standards are moving towards principle-based standards, which Ind AS and IFRS essentially is. There are cases where there would be difference of opinion, professional opinion between statutory auditor, management and us about how to interpret, how to estimate, how to evaluate. So in Indian law, it is very clear, opinion of the auditor stand as auditor's opinion and comment of the CAG stand over and above that. So both are transparently disclosed in the annual report. So we leave it on the judgment of AGM and judgment of the stakeholders at large to interpret it. Financial statement, auditor's opinions and CAG's comment over and above that. So it actually an additional layer of information, perhaps in a way also give a quality assurance comment, not certificate, over statutory auditor's work. It doesn't have much parallel in the international world, but we have evolved our own principles for this. I hope it answers your question.
Thank you, friends. Now, before I hand it over to the organizers, just a couple of words from me. Friends, despite the fact that the auditors are many a times, most of the times, and if I may add this word, I'm using this word consciously, most irresponsibly targeted by the media and even targeted by others, because auditors are the softest target to them. Having said that, we still remain the custodians of public trust. Even today, we are the most trusted professionals. But the onus is on us to ensure that even in future, we remain the most trusted professionals. And not only that, we also remain very, very relevant. Because what the society wants, if we are not able to deliver, we would be going into the oblivion. With these words, I would conclude and hand it over to the organizers.
Thank you so much, Ravi sir, Vice Chairman, ICAI, for the concluding remarks. And yes, audience, please give a thunderous applause to all the panelists sitting over here. Now, on behalf of WOFA 2.0 Organizing Committee, I extend a sincere gratitude to our moderator as well as our distinguished panelists for sharing their wisdom, experience and global perspective. Thank you, seriously thank you so much. At the end, I would like to invite on stage CA Ajit sir, who is the Secretary and IRC of ICAI, for presenting the mementos to our esteemed panelists over here. CA Ajit sir, and IRC of ICAI. Firstly, I'll request Ajit sir to please present memento to Mr. Hussain Niyazy sir, Auditor General of Maldives. Yes, please come forward, Mr. Hussain Niyazy sir. A big round of applause for the gentleman. Yes, please accept the planter as well as the memento. A big round of applause for Mr. Hussain Niyazy sir for his valuable insights. Now I would like to call Mr. Naveen Singhvi sir, Principal Director. I request C. Ajit Kumar Singh to present memento to Mr. Naveen Singhvi sir. Everybody please give him a round of applause. Principal Director, Commercial, Comptroller and Auditor General of India. Please accept a small planter from our side as well as. Thank you so much. Thank you so very much. Now I'll request CA Chitale sir, past President ICAI, to please come forward and accept the memento. I'll request CA Ajit Kumar Singh to please give the memento as well as the planter to Chitale sir. Everybody, yes. For such insightful talks he had. Now I'll request CA Manoj sir to please come forward. Our past President ICAI, I'll request CA Ajit Singh sir to please present the memento as well as a small planter to him. आज के सेशन से मैंने तो ये सीखा, those who mind doesn't matter and those who matter doesn't mind. Thank you so much sir, thank you so much. And I believe the audience must have enjoyed and taken a lot of knowledge from here. So everyone kindly stand up, and all the dignitaries on the dais, Please come forward for the group photograph. Everybody. We'll be showing a gesture of respect for all our dignitaries on the dais. By the time the click is being there, I'll request everyone to give them a thunderous round of applause, everybody, for the outstanding session on this trust triangle, management, TCWG, as well as the auditors. Thank you so very much. We are now moving ahead for the next segment of our program. Thank you so much. Thank you so much. This is Sonali Jain signing off for this session. Bye-bye, everyone. Good evening.